Hello, this is Steve Sanangelo from the SRS Rock Report, and I'm glad you joined me today. This is the new YouTube video update on the global energy crisis that has caused gold eagle demand to surge, especially in the first week of October. Now, there's a lot of dynamics happening in the energy market that I've been talking about. And we're finally seeing that now, and this is going to cause the precious metal prices to go up in the future. I'm going to talk about that. But before I get into this update, I just wanted to share that Cloud Hard Assets, who we sponsor at the SRS Rock Report, has the cheapest, the lowest prices on 2021 Canadian silver maple leafs, only $4.20 over spot. So it's much lower than all the major online dealers. I just wanted to show you that. Now, before we get into the gold eagles and even the silver, what's happening now isn't just because of a freak cold winter. The dynamics have been working over the last several years. And I've been warning how green energy really isn't green and it's not renewable. And it's just going to cause a lot more volatility and trouble. And that's what we're seeing due to here. It says the EU on a tightrope as winter gas supplies worries increase. And due to a very cold winter and a warm summer, they've used a lot of natural gas because their green wind and solar power in the EU did not perform as well. And so now they're very low in natural gas supplies going into the winter. And they're very concerned because as of about a week ago, we could see this is the 10-year average, and this is where they were last year. Their inventory of natural gas in Europe, look how low they are. And so look how low it got. If they don't get enough natural gas, if they use a lot of natural gas, they could be going into very low storage levels. And that's why we're seeing such a huge increase in the price of natural gas. Now, there's this idea that Russia, the Nord 2 pipeline, that they're holding back natural gas to Europe. That's not the case. They're actually sending as much as they can. Now, Russia has its own problem, and this is Russian domestic gas supplies or inventories. And as of the first quarter, 2021, they fell all the way down to here, record low. So Russia has been busy trying to build up its own domestic natural gas stocks for its winter because it had a very cold winter. So this is the problem. It's now a global problem. And I believe we're just hitting what I call the energy cliff. And that's why it's also very important to be in the precious metals. So with Europe now on the wrong side of the equation, they don't have enough natural gas due to ramping up wind and solar. This was on Friday, October 1st. Look at that, $93. Look what happened today. It shot up 116. Now this is 116 euros. But this is what I want to go back and show you. I'm going to relate this to the precious metals. So it's important that you watch the whole video. During the pandemic shutdown, we see a lot of manufacturing. So a lot of economic activity was ground to a halt. And so what happened was they started to stockpile natural gas. And the price of natural gas in Europe at the end of May 2020 got down to 3 euros. Now, this is the kind of, I call just-in-time price. That's what I call the just-in-time price mechanism. So back then, due to what the supply and demand situation, they couldn't give this energy away. It was almost free. But look how much it's changed. We're going to see the same thing with the precious metals. And that's because with energy becoming problematic, so will the debt and the bonds and the stocks. And that's why it's important to be in the precious metals. So I just wanted to show you. So if we see lower precious metal prices, it's kind of the same situation here. People took for granted the natural gas back last year. Now Europe is not taking natural gas for granted. And it's not just Europe. There's problems now in other parts of the world. Japan is paying much higher prices for natural gas, for LNG. And so is South America, like Brazil. They need to import LNG and they're paying higher prices. So this is a global problem. So here we got today, it blew right through the 100 euro level, and it's going to keep going up higher. Now, it's not only the European Union, it's China. You're hearing about China is having an energy crisis. And I talked about this at the SRS Rocker Report. I came out with this silver member, China's coal energy cliff, devouring a massive amount of coal annually. And I'm going to show a few of the silver member charts. I don't think anybody has really an idea how much coal that China is producing and burning. It's almost 4 billion metric tons. Last year, the United States produced 485 million metric tons. So in 1 year, China burned 8 times. So the US last year would have to produce and consume and burn 8 times what China did to have the same amount. That's how much coal is being consumed in China. And it's at such a high level, it's very hard to continue because let me show you. Take a look at this image. This is an image of the massive Mongolia-China coal truck train. I mean, this is not, you know, this is a real image. I mean, this is not a train. These are individual trucks. Look how long this goes. The reason is because China has ramped up so quickly its economic superpower, all the manufacturing that it does in China. It needs a lot of energy, and that's coal, electric generated by coal. They have run out of some of their coal closer to their cities, so they had to move further away, and that's more expensive. And that's what they're doing here. They just can't access enough coal, and that's the problem, and it's just going to get worse with China. Now, before I get into the gold eagles, I just wanted to let you know, if you're interested in silver mining stocks, I did an analysis you cannot find anywhere else on the internet about Fortuna Silver, how Fortuna Silver may become a 10-bagger. I believe if you look at this analysis where you won't find anywhere else, you'll find that very interesting. And then I just published yesterday, Big Trouble at the world's largest silver producer, and that's for silver members. I'm telling you, I was quite shocked when I found out this information, and that's the world's largest silver producer, and that's at the SRS Rocker Report website. Now, I've been warning about the energy cliff. I have my own little hashtag energy cliff. And so if you click on that on Twitter, you're going to see most of my tweets I put the energy cliff. So this person says the gilts, this is the English bonds, sell off on Bloomberg headline about the surge in UK natural gas prices when it shot above 100 to 116 euros, which I can't remember happening before. So what happened? The gilts sold off, the bonds. Now, I said, indeed, another factor not taken into consideration is that bonds are basically any energy IOUs. We have to think of the economy as nothing but burning energy. That's all it is. And so, which creates economic activity and all these materials and equipment and goods. And so if you have a bond, a 10-year bond, that bond gets repaid by 10 years of economic activity. And you have to have increasing energy production to have growing economic activity to pay back those bonds. So bonds are energy IOUs. Now, the thing is, physical gold, I said, get physical gold and silver, which are stores of energy value. That gold coin, that silver coin, I've said this many times over again, that you have in your pocket, the energy that was burned in all forms and stages to go into that coin is locked in there. It's a value. And that gold and silver are the only ones that can do that. Bonds cannot do that. They're IOUs. Stocks are based on price to earnings, which are based upon economic activity, especially growth, and even real estate. So what I've been warning about now for many years seems to be happening. And that has really impacted the Gold Eagle sales in the first week of October. Back in September 8th, and that was 8 days in the month, the Gold Eagle sales were 20,000 ounces. And so far in the first, actually only 2 business days, it's only been 2 or 3 business days, 68,000 ounces of Gold Eagles have already been sold by the US Mint. That's a big number, because if we look at the total sold in September last month, it was 75,000 ounces of Gold Eagles. We're already at 68,000. And so this is the issue. When you see investors get fearful which is energy crisis, because they're having a lot of problems in the UK. You've been reading about and hearing about actually petrol shortages, now food shortages. This is what gold is usually the first thing that investors go to, is the gold first. But if we look at this is the 2020 and 2021 from the US Mint. Last year, total sales of gold eagles were 844,000. Look at that, 990 and a half. It's almost a million already, and we still have most of October, all of November and December. Now Silver Eagle sales are doing fine. They're at 500,000. They're not doing as much, the percentage terms, as the gold eagles are, because when there's issues like this, we tend to see investors move into gold first during fear. But silver, I think silver is going to be one of the most underappreciated assets. So last year we had about 30 million ounces of Silver Eagles. Right now we're at 26.1. I believe we're going to see 32 to 34, possibly more. And it really depends if the US Mint can continue to get the blanks to make the Silver Eagles. And I really think, you see, here's the issue. I really think at some point in time, what's happening with natural gas, being able to get that natural gas, it's going to be the same thing trying to be able to get the bullion products. It's going to be very hard to get them. And people who own them aren't going to sell them. So you're going to see the premiums go up, the availability, it's going to take weeks and months to get them. That's coming because of all the insanity that the Fed and central banks are doing. And it's just going to get worse. Now, I did this article. It's a free member. If you go to the website, you can find it on the SRS Rock Report. It is a free member. And I just want to let you know, we had people to sign up to get the free member articles. You don't have to anymore. All the free member articles now, you do not have to sign up. You can just click on there and read the article. Now, this is the known above ground silver investment stocks and coin bar demand 2000 to mid 2021. For my calculations, and this is LBMA and all the ETFs, what we know about public is about 2.1 billion. And a coin and bar investment since 2000 is 3.1 billion. Now, 818 million ounces of that is just eagles and maples. So most of this coin and bar investment is held by the private citizens, most of it. And that large institutions that want to get access to silver, they can't get that. They're not going to buy Silver Eagles. The same thing that the energy companies in the UK are not going to go to a retail store and buy 20-gallon LPG tanks for natural gas or propane. They're going to go on the open market and buy the wholesale on the futures market. We're going to see an explosion in the silver price due to large institutions and high net worth individuals trying to get silver just like they're trying to get natural gas. And so if there's only 2,100 million ounces or 2.1 billion ounces, that's not, it's about, here, take a look at this new chart. Total known public silver value at the current silver price is 50 billion. Now get this. According to the 2021 capital market reports, global equity values are 123.5 billion and global bond is 105. So total equity and bonds are now 229 trillion. All total known investment of silver is 130 billion compared to 229 trillion. So total silver value versus bonds and stocks, it's not even 1/10 of 1%. It's a half. It's a half of 1/10 of 1%. That's how small it is. And then it's even worse if you understand that large institutions can't access all that privately held silver. They're going to have to get the silver on the open market, because even though if a small investor sells silver, it's going to go into the retail market and another retail investor is going to buy that silver. The large institutions And that's where I think we're going to see the biggest price moves first. They can't access much silver. So when you see, as the energy crisis gets worse, these asset values are going to get into serious trouble, and they're going to try to move into silver and gold. And so this is what I'm saying. It's starting to happen now, and it hasn't caught on yet. Just like natural gas in Europe was only €3. That's the same thing. Investors here are taking silver for granted, but they won't in the future. So again, the same kind of situation dynamics that are taking place in energy are going to take place in the precious metals, because there's not that much silver or gold to access. There's way too much overvalued stocks and bonds. And when energy gets into trouble, so will the value of the stocks and bonds and real estate. And that's why it's important that investors make sure they own physical precious metals. Well, I hope you enjoyed this YouTube video. And also, please, if you want to check out, I will be putting the free member articles at the SRS Rock Report. You do not have to sign up. There's no sign up, no email or anything necessary. You could just go check the new free member articles out. And also, we do put out some very interesting gold and silver subscriber videos and articles that I think you'll find very informative. Well, thank you very much, and I hope you all have a good day.